Hey, Miramar Trades. Hey, give me one real quick. Just make sure you can hear me okay. Otterbox. Hey, Miramar Trades. Clark. How's everyone doing this evening? Excellent. Thanks for giving me the one. Let me know you can hear me okay. Cool. All right, we'll give another minute or so. Let everyone, let other people join. Welcome, welcome. I'm curious. Throw it in the chat. Let me know where everyone's from. Gene Marco, welcome. Give just another minute or two. Let people. Houston, Texas, nice. Utah. That's where Tony is. Tony Pollock, our CEO. He's in Utah. All right. Well, why don't we go ahead? Arizona. Okay. Cool. Gaza. Wow. Okay. Well, welcome everyone. All right. We'll go ahead and we'll kick it off. So just let me just let you know the purpose of this tonight is just to give you an introduction to real life trading. So I'm curious if you would throw it in the chat. Give me a one if you are already familiar with real life trading. And if you're not familiar with real life trading, if this is your first introduction, give me a two. I'm just curious who is here that's already familiar with real life trading. All right, so Clark is Otterbox. Okay, so it looks like most of you are already familiar with real life trading. All right, cool. All right, so purpose of tonight: to introduce you to real life trading, to just give you just kind of this is going to be a very basic introduction to trading and to what the stock market is, but then also just to give you some information, about a program that I actually personally created called Learn to Trade in 20 Hours. So just a little who I am. So my name is Stephen King. I'm the president of Real Life Trading, and I'm also one of the main educators for the company. So this program that I'm also going to talk about tonight called Learn to Trade in 20 Hours is a program that I specifically created for brand new traders, people who have never traded before, but who want to learn how to trade, but also to just give them the perfect foundation for their trading journey. So anyway, let's kick it off. Again, keep in mind this is going to be pretty basic in terms of the introduction to trading itself and to the stock market. But let's talk about real life trading real quick. So our mission is to enrich lives. And we do that by educating the world how to profitably and safely and consistently trade the markets, right? So, and any of you who are familiar with us, and I see that Jean Marco is commenting on seeing something about Jeremy on the Trading Net channel. But anyway, if you're familiar with real life trading, you know that we have a lot of free content. I mean, kind of our approach is freemium. We give a lot of content away, a lot of education away, and the idea there again that all supports our mission of enriching lives, because we don't feel that you should have to be paying for everything, right? There's enough information and education out there that we can actually provide without charging for it. So let's get into it. So what is a stock and why should you own them? And again, keep in mind some of this is going to be pretty basic. You might already know a lot of this stuff, but Again, this was for, specifically meant to be for beginner traders tonight. If you're beyond, if your experience goes beyond this beginner portion of it, just go right on over to reallifetrading.com right now, and you can just go ahead and jump into some more of our advanced content. But stocks, okay? You also hear them referred to as shares, equities, securities. And what they do is that stocks provide you with ownership, typically a small percentage of a publicly owned company. So there are publicly owned companies, and then there are privately owned companies, right? So keep that in mind. Publicly owned companies will offer stock. Privately owned companies do not, at least not publicly traded. A public company is a corporation whose ownership is distributed amongst general public shareholders. So when you own stock in a company, you are a shareholder of that company. And the reason that companies offer stock is typically to raise working capital for the company so that they can go off and they can do other things, so that they can improve the company, they can make the company larger, they can invest in different areas of the company, research and development, whatever that might be. So public companies, they do have to disclose all their financial information to the public and are highly regulated. So right now we're earnings are being released right now. So that's an example of these public companies and how they have to divulge their financial information to the world, right? So they release earnings, they let you know how they're doing, and then they hold a conference call and they talk about their strategies and what they're going to be doing moving forward. So to give you an idea, like Apple, right? We all know Apple. Apple is a publicly traded company. It is a public company. Versus a company like Chick-fil-A, if you're familiar with Chick-fil-A, and I think most people are, it is a privately held company, which is interesting because Chick-fil-A is a massive company, but it is still privately held. It is not a public company. And so stocks, right? So stock ownership. The reason that you would want to invest in stocks, to own stocks, is that stock ownership allows you to generate income, grow your net worth, make money while you sleep, provide financial freedom, and create generational wealth. And that is something that, you can't just do owning anything, right? You own a car, that's not going to make you money while you're sleeping, right? You invest in a vacation property, and yeah, you might rent it out via like an Airbnb, but for the most part, right, it's going to build some equity. But stocks can help you exponentially grow your net worth and help you make money. And again, while you're asleep. So nothing better than making money while you're sleeping. So let's talk about what the stock market is. Okay. And in essence, what it is, the stock market is a massive auction. Okay. So picture an auction where buyers and sellers come together, and this massive auction, the purpose of it is to facilitate the exchange of securities between the buyers and sellers. And then you wonder, like, who are the market's participants? Well, it varies, but for the most part, what you're going to be looking at is what moves the market primarily are the institutional traders. So we're talking large banks, hedge funds, mutual funds, insurance companies, pension funds, but then there's also people like us, right? So retail traders, right? Small retail traders who want to get in. We want to participate in the market. We want to make money in the market. We are not the ones who are going to move the market, right? The big money moves the market, but we can still participate, which is a pretty cool thing if you think about it. The fact that, with just a little bit of money, a little bit of capital, we can participate in the same market where these massive institutional traders are trading securities. What's interesting is a lot of times people don't realize that there is a buyer and a seller for every single transaction. So every time that you buy a stock, there's somebody selling it to you, and vice versa. And it's sometimes can be a little confusing because you go, if you've ever followed the markets, if you've ever looked at trading, and you go, okay, well, there's bullish volume and there's bearish volume, right? So how does that get determined if there's a buyer and a seller for every transaction? And the answer is there's a thing called the bid and the ask, which is something that I get into in the course that I created. But but it is an interesting concept that you do have to understand that there is a buyer and a seller for every single transaction. So even though if you've dabbled at all with the market and with trading, and then you see these bull candles and bearish candles, well, they get determined by the buyers and the sellers. But there is even though it's a bearish candle, there's still in that case, it would be the seller's in control of that candle, but there's still a buyer for every seller who sells. So more and more, the stock market and globally, the stock market is being driven by high frequency computers, robots, the bots, and algorithms, which presents its own unique set of challenges for people like us, right? So retail traders, but there are ways to participate in the market, and because you're competing with these algorithms, you're competing with the big institutional traders, but you're also competing with these high frequency computers and the algorithms. But there are ways to approach trading where you can compete with that. And we teach that at Real Life Trading. All right. So let's talk a little bit about what trading is. Okay. So trading is specifically for generating cash flow and to create financial freedom. Used to pay off debt, pay bills, pay for vacation, purchase real estate, things like that. The cool thing about trading is all you need is a laptop and an internet connection, and you can trade from anywhere. So a little bit of a quick backstory. So I just spent 2 weeks in Aruba, and I was in Aruba on vacation, quasi vacation. I was still working while I was there, but I could still trade while I was there, right? So I can be on vacation. I can be making money while I'm on vacation. And that's an amazing thing, right? As I'm sitting there spending money on vacation, I can actually make money to pay for it, right? And that's the beautiful thing about trading, is that it does afford you that ability to generate cash flow. So unlike investing, right? Because they are different. Investing is a different approach where you're putting money in long term, but trading is a very short term time frame. So we're talking, like if you're day trading, it's going to be minutes, right? It could be minutes, could be a couple hours. Or if you're talking swing trading, we're talking days, weeks, or months. But the bottom line is trading is typically less than a year, right? Whereas when you are doing long-term investing, you're thinking much longer time frames. Trading, short time frames. And again, you can day trade, you can swing trade. Day trading is going to be very small time frames. Again, it could be minutes to a couple of hours, and you close your positions every day, versus swing trading where you're going to be holding positions overnight. And again, it could be anywhere from a couple of days to a few weeks to a couple months. So because it is a short-term approach to growing your net worth, it is considered a short-term capital gain, right? Because you're typically holding this less than a year. So there are tax consequences, right? So if it is a short-term capital gain, it's going to be taxed accordingly. So just be aware of that, because it's just like your job, right? Your job gets taxed. So give you an example. So let's say you buy 100 shares of a stock for $12, and maybe in a couple days, a week, or even that same day, you sell it for 36. It goes from 12 to 36. So your initial $1,200 cash outlay becomes a $1,200 profit. Pretty good, right? You can't beat that. So also remember that for every share that you buy, so for every share that you own, you receive $1 for every dollar that the price of that stock goes up. So if it goes up $100, you just made $100. So it's a 1-for-1 for the number of shares that you own, and then multiply that by the number of shares that you have. And I think, and then again, I already talked a little bit about day trading versus swing trading. Again, day trading is going to be, you're going to be sitting in front of the computer all day long. It doesn't have to be all day. You could just trade the morning session, right? You could trade from 9:30 until, let's say, 11:30. Or you could then trade in the afternoon from like 1 to 2. So that's the great thing about trading is you can make your own hours. But so day trading is going to be very fast paced. You're going to be sitting in front of your computer. You're going to be managing your trades, constantly as you're in them, versus swing trading, which gives you a little bit more flexibility in terms of time because you don't have to be in front of the computer all day long. You can do it. You can get home. You can have a 9-to-5 job, come home from work, right? Come home from work, sit down, spend an hour or maybe an hour and a half going through charts, looking for setups, going ahead and putting your orders in and just letting them sit there, right? Set it and forget it. Sometimes they'll fill the next day while you're at work. You come home, you see that you got filled, and then you can, over the course of the next however long, whether it's a few days or a few weeks, you manage that trade at night. So it's definitely, it's not as fast paced, of course, because you're doing it at night and you only need a little bit of time every single night to manage your trades and to look for new setups versus day trading when you're going to be sitting in front of the computer, the entire day. So I already mentioned day trading, you're in and out the same day. You don't hold overnight, so you don't have that overnight risk exposure. And again, could be a few minutes to a few hours. And swing trading, you're holding for a few days, weeks, or months. Again, with swing trading, you are holding overnight. So there is some overnight exposure, right? So if you follow the markets at all and you know that stocks can gap, right? So for instance, during earnings, right? Earnings is a great example. Stock comes out after hours with earnings, could be good or bad. And the next day the stock either gaps up or gaps down, right? You don't have any control over that. That is an example of the overnight exposure. But when you're swing trading, there are things that you can do to hedge that, right? So if you know that earnings are coming up, there are ways that you can, and things that you can do and instruments that are available to help you hedge against something going against you, right? So if you are bullish and you have bought shares, there are things that you can do to offset if you get a gap down against you. Again, we teach all that at Real Life Trading. So this is one of my favorite topics. Okay, so trading versus gambling. So people often say, well, trading is gambling, right? And I would argue that that is not at all. That's not at all the truth, right? So the two are very different, although there are similarities. So if you think about gambling, so if you sit down at blackjack, anybody who's played blackjack, you know that there's rules involved, right? There's certain rules that you follow. Same thing with roulette. So there are some similarities between trading and gambling, but here's the difference. Trading is not gambling if it's done correctly. So let me give you an example. Okay. So you go to the blackjack table and you sit down and you throw in, let's say, $100 worth of chips, right? The dealer goes around and deals the first, couple cards. You look at them and you realize that they're awful cards. You can't just reach over and grab your money and get up and walk away from the table, right? You can't do it. As soon as you put that money down, the cards are dealt, you're in for good or bad, right? You're either going to win or you're going to lose. And that's, the flip of the coin, right? It's either win or lose. You can't get up from the table and take your money and walk away. Whereas trading, you are fully in control of, you put the money down, you can walk away anytime. So you get into a trade, right? You put your money in, you get into the trade, you can leave at any time. You can exit that trade. You can exit it for a small gain. You can exit for a large gain. You can exit for a small loss, but it's up to you. You have total control over that. You can walk away from it at any point, get out of the trade, versus gambling. You can't just get up and walk away from the table. You're either going to win or you're going to lose, and you have no control over that because the cards are going to be the cards. Versus trading, you can get up and you can walk away from that table by exiting the trade. So that's my argument about what the difference is between trading and gambling and why they're not the same. So trading, right? People often think, all they focus on is trading and making profits. And the reality is trading is all about controlling risk. Okay. So keeping your losses small, risking the same amount of money on every single trade. And that is something that people don't understand is people will get into trading and they don't have the concept of every single trade you should be risking the same amount of money. And they go, well, how's that possible, right? Because Tesla is much more expensive than something like Robinhood, right? So how do you control that? But there is a way to control it. So again, all about controlling risk and being able to, there's a system where you can risk the same amount of money on every single trade, right? So profitable traders use tools like technical analysis to put the odds in our favor. And that's one of the things that we teach with the Learn to Trade in 20 Hours is we really jump into and dive into technical analysis. Because if you can understand technical analysis, if you can read a chart, you can anticipate what's going to happen in the markets. So we have something at Real Life Trading, and by the way, so when I joined Real Life Trading, I joined in 2015, and I joined as a member. I was one of the earliest members. I wasn't member number one when Jeremy started Real Life Trading, but I was pretty close. But at the time when I joined Real Life Trading, I had no concept of how to manage my risk. So I would go into a trade and I would just randomly select my share size. I would be like, all right, well, in this trade, I'm going to trade 100 shares. This one is going to be 50. This one is going to be this. And I was just like randomly picking my share size. As a result, I could lose $100 on a trade. I could lose $50 on a trade. I could lose $2,000 on a trade, right? I didn't have any control of my risk. Then I got to Real Life Trading and I discovered the R system, right? And so the R system that we teach is a method by which you control every single trade, how much money you potentially can lose. So it's the complete antithesis of selecting a random share size, like what I used to do. So you go into a trade and you determine your R ahead of time, and you always consistently trade the same R. So you go into the trade and you say, my R is $100, whatever it can be. It could be $50, it could be $100, it could be $200, it doesn't matter. But you always consistently trade that same R. So we refer to that as a risk unit. So whatever dollar amount that is that you assign as your risk unit, that's the dollar amount that you put at risk every single trade. So regardless, you should never lose. If your R is 100, the worst case scenario, if you lose a trade, it should be $100. No more, no less. Well, that's not true. There are ways to do it less, right? I should have just said no more, right? So if it's $200, you enter the trade. Let's say the trade goes against you. You don't have a way. You're not able to move your stop up at all. Let's just say just rampages against you. The most you're going to lose is $200. And again, that's a very different approach than just randomly selecting a share size. Again, what I used to do. So when I joined Real Life Trading, just understanding that R system completely changed my trading. Because again, it's all about controlling your risk and mitigating risk. So the other very important thing is to have a very simple strategy to follow. So one of the things that we've done with this Learn to Trade in 20 Hours program is we have taken a strategy. So we have a proven strategy that's been back tested, thousands of hours of back testing, and it's very simple to follow. It's rules based, extremely easy to follow. You can just trade one strategy, right? So when you're getting started trading, you want to keep it simple. You don't want to overcomplicate things. So having one simple strategy to trade makes all the difference when you are learning how to trade the markets. So give you an idea. Okay, so this is Microsoft. This is actually from today. So you can see here, entry would have been above that, and this is the strategy. This is what it would look like, when you have a winning trade with this strategy. I can't go into all the details right now. I don't have the time to explain all the rules of the strategy. But basically, if you look at this, you would get in, your entry would be above that red candle, and there's a very specific reason why it's that candle. Stop down below, and then here you hit to our target, right? So you double your money in a very short amount of time on this trade on Microsoft, and that was actually a trade from today. So just give you an idea for a bearish trade, right? So here's Walmart from yesterday. So Walmart was also, now again, bearish trade versus bullish trade, but here was entry below the, I don't know if my cursor's showing up here, but entry below the, this is a green like doji candle here, sandwiched in between these two bearish candles, but entry below that and stop up above the upper wicks of a couple of those candles. And then there's a way that you can actually manage the trade once you're in it that I teach. It's a trailing stop technique that would have been able to get you down to 3.5 R on this trade on Walmart. So again, 3.5 times whatever your risk is, right? So not bad, right? I mean, those are pretty good opportunities in terms of the trading. And again, it's all about putting the probabilities in your favor. And by the way, in the chat, if you have any questions, feel free, put it in there. I'm watching the chat. I will be happy to answer any questions that you have if you have any. So there's a couple examples of some trades. Again, Microsoft was from today. Walmart was from yesterday. This is the strategy that we teach. Very simple. Again, in the class, go through all the details of the strategy and all the rules that you need to follow. So real quick, let's talk about what the Learn to Trade in 20 Hours program is all about. Okay. So first of all, you want to build the proper foundation for your trading journey. Okay. And you do this by mastering several different things, right? So again, if you're new to trading, you want to build the proper foundation. And that's what this course is all about. So we focus on fundamentals of technical analysis and technical indicators, right? So there's a thing that I refer to as chart vision. So if you can get down the concept of technical analysis, you're able to read a chart, you're able to read the price action of the candles, you're able to read the volume, you're able to apply certain technical indicators. And again, we have very specific technical indicators that we use, because one thing you do not want to do as a new trader is overload your charts with technical indicators. And I explain why in the class, but so we focus heavily on getting a solid foundation and understanding on technical analysis, because that is the main tool by which you're going to use to put the probabilities in your favor as a trader. So candlesticks and candlestick sentiment, right? So being able to read the charts, again, I mentioned chart vision. So being able to read the candlesticks on the chart, but not just seeing that, okay, there's a red candle and a green candle, but being able to understand the sentiment of each individual candle, because they tell a story. So if you're able to read the sentiment of every single candle that you see and pull those all together and understand the story that's telling you, you can learn to anticipate the moves in the market. So volume. Okay, volume is another very key thing that you need to understand, and we teach how to interpret and analyze volume. Now, let me just back up real quick, because there are only two things that you need to understand and know in order to trade, and that is price action, which are the candles, right? So price action and volume, the only two things that you actually need to be a successful trader. So if you think about I'll answer that question. Give me 1 second. So if you think about the fact that, most traders, when they start out, they're searching for the Holy Grail. They think there's some indicator out there that they can apply to their chart that is going to help them, that's going to give them the edge. The problem is then they load up their charts with all these indicators, and they're useless. You don't need them. All they do is they clog up your charts. They create way too much noise. And there's a term called paralysis through analysis. And what ends up happening is you look at the charts, you spend so much time trying to analyze those indicators that you then miss trades because you're hesitant and you don't click the buttons. Okay, so to answer the question, okay, the question is, why might you aim for 2R rather than 1.2R? Okay, so my answer to that is, would you rather make 2R or would you rather make 1.2? Now, I will tell you this, that when every single trade that I get into, my target that I put in there is 3R every single trade, because I want to make the most money I can make when I'm in a trade. So instead of just getting out at 1.2R, I'm going to hold, if I can get to 2R, if I can get to 3R, if I can get to 3.5R. So let me just give you an idea. Let me go back a little bit on this. Let me go to this other chart right here. Okay. So to answer your question, so if you notice here, Walmart, that's a 3.5R trade. Okay. So my question for you is, would you rather have 1.2R or would you rather have 3.5R? Right? So why exit a trade if there's still room for it to go? Now, you don't know that there's room for it to go, but the way that you get to 3.5R on this particular chart is by following a very specific trailing stop technique that I teach. Okay. And it will keep you in the trade for as long as possible. And eventually in this particular trade, that big bullish candle down there at the bottom, right? When it finally hit the bottom and it, when it was making a new low and you got the big bullish candle, that's what ended up forcing the exit of the trade, right? But there is a way, and again, this is part of what I teach in the class, a very specific trailing stop technique that I teach that keeps you in the trade for as long as possible. And that could maybe run to 5R, that could go to 10R. But my point is, why exit at 1.2 if you can make 3.5, if you can make 5, right? So hopefully I answered your question. I would much rather stay in a trade for as long as I can. So there is a, and keep in mind, right? Everyone has their different approaches, right? So 1.2, I will tell you this, 1.2 is my minimum amount because you're bringing up the whole 1.2, right? 1.2 is my minimum criteria. So when I'm looking at a trade, at the very minimum, I want to hit 1.2R. That's my minimum. But again, when I set up my trade is always set up, my profit target is always set up at 3R because I can always adjust it, right? So I can adjust it down to, I could bring it down to 2R, or I could pull it back and I can make my target 5R. But the way that I approach it is this trailing stop technique that I use, that dictates where my final target is. So hopefully that answers your question. Okay. So talked about the how to interpret and analyze volume, right? Volume is a very important thing. If you can understand when you're watching, so wait, real quick. So if you're walking away than 1.2, but you can manage it. Okay. So when I'm in a trade, right? So I don't walk away. So when I'm in a trade, I'm actively managing it. So this trailing stop technique that I'm referring to, it requires you to be in front of the computer and managing. Okay. So there's no way to do a automated based on the technique that I use. You have to actually be in front of the trade in front of your computer to manage the trade. So again, back to the volume, right? Understanding that it's like, I always talk about like location, just like real estate, right? So when you see volume spikes and when you're analyzing the volume with analyzing the candlesticks, and you see certain patterns forming on the candlesticks and you see volume increasing, it tells a story. And so if you understand what that story is that it's telling you, you can prepare for reversals. You can prepare for, you might then at that point look to be taking profit. But for the most part, I use the candlesticks and the volume to look for reversal trades. So if I'm seeing a certain candle at the top of a move with a volume spike, I'm looking then to go bearish. Or if price is going bearish and I see a certain candle at the bottom with a volume spike, I'm looking then to take reversal and go bullish. All right, we dive deep into trend, right? How do I identify the trend? Support resistance zones, plotting trend lines. Then part of the trend, I also dive into the S curve. And I don't know if any of you are familiar with the term the S curve, but that is something that we also teach a lot at real life trading, but it's all about understanding the movement of the market, the natural movement of the market. And that is this natural S curve that occurs in every single trend. So if you understand the way that the S curve functions and the way it moves, you can, again, anticipate. It's about being able to anticipate and putting the probabilities in your favor. So trend, support resistance zones, plotting trend lines, Fibonacci retracements, something I use constantly in my trading. So again, we already talked about the R system a little bit, but risk management, again, it's all about, comes down to the how to succeed in trading is how to manage your risk, preserving your capital, how to manage a trade when you're in a trade, how to control your losses, right? That's how you succeed in trading. Get into order types, because order types can be very confusing for a lot of people, right? So all the various different order types, go through in detail, explain what they are, but the fact of the matter is you only need to know a couple, okay? But the key thing is placing OCO, what is called an OCO bracket order. One cancels the other. Understanding how to build an OCO bracket order, properly build it, and then once you're in it, then to be able to properly manage that trade, as I already talked about, using this trailing stop technique that I use. So, and again, it comes back to, I already talked about, a very simple but very profitable rules-based trading strategy, right? And that is, to approach trading, especially as a beginner, to have something that is easy to follow. First of all, easy to learn, but then easy to follow, and it's rules-based, very straightforward. It simplifies your life, and that's what trading is all about when you're starting out, is keeping it simple. So the Learn to Trade in 20 hours class, we have it on the website. It's $299. I'm going to go ahead and put in the chat the link for it if anyone is interested. Give me 1 second. I'm going to put right there in the chat. That is a link for the landing page for the Learn to Trade in 20 hours. Okay. So again, this is a class that was developed specifically, and let me explain a little bit to you how I developed this class. So there's a concept that if you want to master a skill, whatever that skill might be, it requires 10,000 hours to master a skill. Well, who has 10,000 hours? And also, when you talk about mastering a skill in 10,000 hours, we're talking about like elite athletes, concert pianists, a ballerina, right? World-class performers. Those are the people who put in 10,000 hours and become masters at whatever it is they do. I don't have 10,000 hours to do that. I'm sure you don't have 10,000 hours. The reality is, though, we don't need 10,000 hours in order to become proficient at something. So what I did was, I don't know how well you can see this. So this book right here. So it's a book that is called The First 20 Hours. It was written by Josh Kaufman, is the author of this book. So what Josh did was, Josh looked at that and said, okay, well, the average person doesn't have 10,000 hours to dedicate to becoming an expert in something, but how much time does it take to become proficient in something? And he came up with the answer, and the answer is 20 hours. So 20 hours of dedicated practice and being able to take a complex concept and breaking it down into easily to understand modules, and then again 20 hours of dedicated practice, you can become proficient at any skill. So what I did was, I took the concept of trading, I took the principles from this book, I broke down all of those complicated and hard to understand, sometimes hard to understand concepts of trading. I broke them down into very easy to understand concepts, and that's how I teach the class. And so the concept of the class was again, came out of this book. So again, if you ever want to read it, it's a great book, but The First 20 Hours. So I took that, came up with the concept for the class. Again, 20 hours, and it works. Like the people who've taken this class, so it's a month-long class. So I do this every single month. So we're coming up. We have new classes starting in May. So it will start May 5th and it will go through the end of the month. We get together twice a week. So there's Mondays and Wednesdays. It's an hour and a half each night of live class. Then I give you dedicated homework and assignments to do in between classes. So, of course, between Monday and Wednesday, you would have one day to do homework, but then between Wednesday and Monday, you have several days to do homework. So I actually have a very specific curriculum that I follow, and the homework, the dedicated homework that you do on your own, you go from zero, knowing nothing about trading, to being able to trade in 20 hours, which breaks down into 1 month, right? So there's 8 classes, again, 8 classes with 2 live sessions every week for an hour and a half each sessions, Monday and Wednesday. The classes are recorded, so if you don't make a class, that's okay. You watch the recording. And that's actually always part of the homework, is to rewatch the class. So classes are recorded. You then have access to the classes forever. Okay, so once you receive that recording, the recording is it's lifetime. You have it. You can always go back. You could redo the class on your own after you've taken it. Okay, so we've tried to come up with a price that we thought would be very cost effective for somebody to jump into trading. So for a month-long class for $300, and what I'm going to do also, if anyone is interested in pursuing this, and again, I already put the link for the landing page here, but what I'm going to do is, in addition to the $299 to the course, if you sign up for the course, and I'm going to do this for anybody who signs up tonight, you have until midnight tonight to sign up for the course. Anybody who signs up today after this class ends until midnight tonight, I'm going to give you our lifetime access pass. So if you go on the website right now, reallifetrading.com, and you look up the lifetime access pass, it's a $97 expense to join the lifetime. But what do you get for it? So lifetime access is to our exclusive trading community, which we use Slack for this trading community. So again, lifetime. This will be included in the $299. So we provide real-time support, valuable market insights, and then again, you can connect with fellow traders via Slack. So you have access to these various different channels within our Slack community that you can go between. You can interact with other traders. You can ask questions. You can get support from people like myself and other members of Real Life Trading. We have free. What you end up doing is you'll create a dashboard for yourself with Real Life Trading, and so on your dashboard every single month you get free monthly trading courses. So we add a new free trading course to your dashboard every single month, and then there's also several live weekly education sessions completely free. So this is all included as part of the lifetime access pass. In addition, hours of free trading courses. So we will populate the free monthly one, those are unique courses that only are given out. They only exist for the month, then they go away. But then in addition to that, you get hours of free trading courses that we just populate your dashboard with. All right, again, that's a $97 value that we're giving free to anybody who signs up for the Learn to Trade in 20 hours. Again, anybody from now until midnight tonight. Again, if you want to go to the website, reallifetrading.com, you can check out what that lifetime all access pass is, our lifetime access pass. Again, $97 value. I will give that for free, included in the cost of the $299. Questions? Open to questions. If anybody has any questions for me. All right. Well, that's the presentation I had for you. Again, it was just to give you a brief introduction into trading, to real life trading, myself, and then also to present to you this course that I created, again, that is geared towards beginners and will give you the foundation that you need for your trading career. Anyway, I appreciate everyone being with me tonight. Thank you for being here. Again, jump on over. I gave you the link in the chat there. reallifetraining.com. But again, the course is Learn to Trade in 20 Hours. Again, between now and midnight, anybody who signs up, you'll get the lifetime access pass for free. All right. Thanks for being with me. Appreciate it.